Hey everyone. I recently sent out an email about the new Canada Revenue Agency trust reporting requirements, and I received a number of replies, clients wondering whether this particular legislation affects them. And rightly so, it can be confusing. So, in today's video, I'm going to cover what you need to know about the Canada Revenue Agency's new trust reporting requirements. First thing, what is a trust? A trust is a legal arrangement whereby a grantor here, or sometimes called a settler, will put money generally, okay, or any other kind of asset, but in this case, let's say money, into a trust, okay, and it's managed by a trustee, okay, and the trustee will manage the money or whatever the asset is on behalf of the beneficiaries, okay, and the beneficiaries can be children, can be elderly parents, it can be anything really. But really, what you need to know is that a trust involves these three people. Sometimes they can be the same people, or someone can have two roles in this particular arrangement. But generally speaking, this is the way a trust works. So, who is affected by this new legislation? In most cases, this is going to be an adult child who has a name on a bank account as a joint owner with an elderly parent. And they're doing this for a couple of reasons. One, it may be convenient so that they can help their parent with banking. Or two, they have legal ownership on the account if something happens to the parent so that it bypasses the asset, bypasses probate, and they save some money, and it becomes easier to manage the asset once the parent passes away. So, in those cases, if you are an adult child who has their name on a bank account or an investment account, or a home, an investment property, a cottage, it can be a number of different things. Okay, then this legislation will affect you. What do you have to do if you have an arrangement such as this? Well, you never have before, but now the new legislation says you have to file a tax return. Okay, and the tax return is a trust return known as a T3. That's what we're looking at here. And generally, they are due to be filed on March, the end of March, rather, or 90 days after the beginning of the year, January 1st. So they would be due at the end of March in most years, but because this is the first year and the CRA is going to give us all a break, they're going to allow us to file these anytime this year without penalty. So get to it as quickly as you can, but you do have a little bit more time this year to get your affairs in order if you have to file and if you have one of these Bear Trust arrangements. If you want more information, you can go to Google and type in canada.ca. It will take you here. You're going to click either English or French, in this case, English, and it'll take you here. And what you're going to do is you're going to come in here and you're going to, in the search bar, and you're going to type in Bear Trust Rules. Click the search function, and it will take you here. And the first result will be what you want to click on. New reporting requirements for trusts. You click on that, and it has all of the information that you're going to want on this particular subject. So again, Canada.ca, English, Bear Trust Rules, and it will take you to here. Other than that, you can, of course, email me at g.deluca at wealthplancanada.ca, or you can call me if you have my number, and we can discuss your specific situation, and I can answer any questions that you have. Thanks very much. We'll see you again.